At the start of 2025, international gold prices have already soared to the high of $2,700, and in just half a month, they've shot up to $2,900. Now, big players like Citigroup and Goldman Sachs are predicting that gold prices will break through $3,000. Today, we're going to share with you a guide on how to avoid pitfalls in gold investment and cash out wisely. The rise in gold prices is not hard to understand. The trend of de-dollarization, the US debt crisis, and the continuous buying by global central banks have all driven gold prices upward. From the beginning of 2021 to now, gold prices have doubled, with an average compound annual return rate of 18.9%. This is already an extremely impressive performance. However, gold prices can be highly volatile. For example, from 2008 to 2011, gold prices soared from $1,000 to $1,920, with an annualized return rate of 24.3%. But if you bought at the peak in 2011, you might still be losing money by 2018. Therefore, timing is crucial in gold investment. The difference between profit and loss can be just a matter of a moment. Looking at historical data, gold prices have been highly volatile. From 1990 to now, London gold prices have risen from $354 to $2,900, with countless ups and downs along the way. So, gold is not an asset that always goes up in value. It has a strong cyclical nature. Don't aim to sell at the absolute peak. As long as you can cash out at a relatively high price, you've already won. If you have gold jewelry that you rarely wear, such as gold bracelets or necklaces, with the current favorable market conditions, many people might want to cash out. But when cashing out, be very careful. Firstly, there's the issue of the scale. Many gold recycling shops may have electronic scales that automatically reduce weight. Without calibration using weights, or even with remote control tricks, they can steal grams. For example, 10 grams of gold might show up as 9 grams on the scale. So, the first step in cashing out is to know the accurate weight of your gold. Once the weight issue is settled, the purity issue arises. Some shops might say that the gold is dirty and needs to be cleaned before weighing. After cleaning, they might claim that a few grams are missing, blaming it on sweat or dirt. In reality, sweat does not affect weight, and any loss in grams is likely due to their use of aqua regia to steal gold. Some shops might also use fire to test authenticity, telling you that a few grams are fake or impure, and that the buyback price will be discounted. In such cases, the best approach is to refuse cleaning with water or fire and insist on professional instrument testing. Gold recycling only considers weight and purity, not brand or condition. As long as the metal material is fine, whether it's jewelry, gold bars, or crafts, the recycling price is the same. So, before cashing out, always check the current international gold price and ask the shop clearly about the recycling price. Record the entire process as evidence and accept professional instrument testing directly. This way, you can avoid 90% of the pitfalls. Although gold investment has a promising outlook, be cautious when cashing out. No asset has an eternal myth. There are only cycles of ups and downs. By timing your investment well and avoiding pitfalls when cashing out, you can make a stable profit. Tell us in comments, have you ever fallen into any pitfalls when cashing out gold? Or what's your take on gold investment? Like and follow us for unique insights.